talk next about Sappi, which was what Gary mentioned right there. These guys, also a global player, but Eugene van As, well, he wasn't the founder, but he was the modernizer of the business back in the 1970s and 80s, made a significant move into coated fine papers in the United States market by buying Scott Papers. Now, what that means is the glossy stuff that's used in magazines as well as corporate annual reports and that kind of thing. To be fair to them, they are also a player in other kinds of paper, as well as chemical cellulose, which is an important ingredient in the manufacturing now of all sorts of high-tech fabrics and fibers, which are used in the clothing industry and elsewhere. Market capitalization, though, has stagnated for many years at about 20 billion rand. I see it's now 21.8. After a nice run-up last year, but a bit of a fall recently. Price-to-earnings ratio, probably measured on the prior 6-month reports, is about 10.6. Dividend yield, I'm not quite sure what it is. It's not paying dividend, or it has paid a few dividends,
yeah, it does,
but the yield is not showing there as a positive.
Not at the moment, no dividends now.
So the share price chart, why don't we put up the share chart and let's have a look at that, because it does set the scene well. It does poorly and then bounces hard in 2013, 2014, but sagging, and then quarterly results last week, it fell quite sharply.
Yeah, I mean, it had a 6% run up just before those results and then pulled back 6% after. So not too much movement in absolute terms. But I mean, if you look at those results, I mean, Q3 was flat for them, but Q3, for Sappi is generally very, very weak. They actually have their biggest quarter is the fourth quarter. So I mean, if you listen to what Steve Binney's saying, he says, watch these fourth quarter results. They're going to be far, far better. But they're suffering from, in the US, there's just a lack of demand for the graphic paper, which is one of the...
But that's understandable, because we've talked about this many times before. The premium printed product, like the big fat fashion magazines, are largely migrating online, or at least the readers are migrating online.
Definitely, and I mean, this is a twilight industry that they're operating, and that's obviously why there's the shift to chemical cellulose. But it's not just that, it's also the stronger dollar, which is allowing there to be even, because I mean, remember, they actually manufacture in the US as well, but it's actually allowing cheaper imports in, which is competing with Sappi products in the US, which is putting some pressure on the US business as well.
Steve Binney is the new CEO. Remember, we had a few transition personalities come and go, and Ralph Butker unfortunately fell ill. I mean, is under firm hands now? Is there a more settled environment in the boardroom?
Definitely. He's got a lot of work ahead of him, though. I mean, they are obviously rationalizing the business to some extent. So they're selling off, one of the craft mills in South Africa. They're also selling off another one. I've forgotten its name now. But just because they don't have the competitive advantage, they're still focusing on really that move into chemical cellulose.
Well, let's talk about another issue, which is the debt levels. Now, in prior years, they financed some pretty substantial acquisitions in Europe in order to try and get control of the European market, which is still their most important. Close down production in order to try and force consolidation. Good and well, but the debt levels go to the moon. The fact of the matter is, though, in recent years, because Treasury bills issued by major governments, including the US and Europeans, have been so low, there's been quite a big demand for corporate credit. So Sappi's been extremely lucky, because what may have been perceived to be crippling debt levels have actually been perfectly well managed, because there's been such demand for this sort of semi-high yield paper. So they've dodged a bullet, you'd have to say, because they've got 25 billion rands worth of debt. And 20-odd billion rands worth of market capitalization.
I mean, they're trying to bring, the net debt now below. I think they're talking about 1.8 billion now, and they've done a very good job there. Also, one of the big bonds is maturing 2017. I think it's in June or July, which is going to give them an opportunity to refinance. And like you say, the whole environment for refinancing in Europe. I mean, I think it's about 40% of their debt is European debt. They're going to be able to refinance that at lower costs, which is an opportunity for the company. I think it's going to be very good for Sappi.
And that probably explains the strong share price in the recent years. Okay, but the chemical cellulose, that market's also been a bit flat and a little bit oversupplied. They're saying that's the future of the company, and that's good and well, but is there enough there for you? How are you going to call this one?
I think I mean, they're still trying to move into it aggressively. I mean, what they call it, the dissolving wood pulp is what they're selling. And I mean, if you look at it, it's still, I think, in revenue terms and actual sales numbers, you're only looking at about 17% of the business. So there's still a lot of growth to be had. That's up quite dramatically. So I mean, they are growing in that segment. But as much as guys say this is not a technology-driven industry, I mean, it's becoming becoming that way. And I mean, they've now also started with the nanocellulose plant in Netherlands as well, which is quite exciting. I mean, you know, and they're finding all sorts of new applications for you know, different chemical cellulose. So I think it can be a very exciting industry. I'm not going to go hot on Sappi though, but I think it's one that you've got to watch, because, you know, at a 10 PE it's not expensive, and if they start getting things right, and it could start to move.
And as you said earlier, the fourth quarter would be an important one for them. I'm going to go with not hot. You're going to go with not hot.
I'm also going not hot.
But perhaps keep it on the watch list.